How's it, guys? Welcome back to FX Rhapsody. Today we're going to be looking at only one currency pair. It's going to be the British pound US dollar. Before we hit the charts, just go visit my website. The link is in the description and it's on the bottom left corner over here where you can see my previous analysis on this currency pair. You will also find some nice strategies, anything that you need to get started into trading. There's some nice video categories there for those of you that's new to trading. And then also COT reports, where we look at the COT reports when we do an analysis on the weekend. We're doing top-down analysis. So COT reports is in the resource tab to download for free. So just go click on that and you can use it on your own will on the timeframes or the currency pairs that you want. And then also my preferred brokers, guys. These guys are brilliant. You always need a reliable broker on your side when it comes to trading. So let us hit the charts. So we're looking at the British pound, US dollar. We're looking at, or we're focusing on the daily time frame. Then we're moving down 4 hourly and to the 1 hourly. So on the daily time frame, what we can see is we can see this big movement downwards, and then the retracement coming down up again. And then, you know, what currently is happening is you can see this nice little, there was a support area that was created in the market, you know, with that little candle over there, that green candle. Okay, so you have couple of bearish candles over here and a nice little green candle which creates a support in the market. So that area is a nice area where you can just, you know, make a little structure in the market, and you can see price breaking above it, coming below it, and then just tapping into that area again. So can we see continuation downwards, or will we see eventually a continuation upwards on the British pound? But again, time will tell. So let us move to the, there we go, let us move to the 4 hour time frame. So on the 4 hour time frame, I'm just going to zoom out a little bit, okay? And it has come to my attention that, you know, I had a comment this weekend. I don't normally do this, but I mean, people correcting you on your mistakes. So I see a little trend line going down here, all right? I see that. That is the way I draw my trend lines. I had a comment to say that you must draw your trend lines on the tip of each candle, okay? So let us do that. So if I draw a trend line on the tip of each candle, okay, we have this. So we have a touch of the candle and then a touch of that candle, and then price going down again, coming up, not touching it and not touching that one. So for me, that is not the, I'm not saying the correct way, okay? I'm using it as where most candles get touched on a candle. So you can adjust your trend line, okay? For me, a price breaking above, let's just have a look here. I'm just going to zoom in a little bit. That is not a break of a trend line. If I have my trend line running on the price itself, yes. If the price broke above that trend line, okay, then I would say, okay, that's either a false breakout or break above that because price closed above it and then carry on downwards. So if I draw my trend lines like I'm doing it now, okay, I'm cutting through the wicks because I need a trend line that is touching or that is getting touched by a couple of candles. Okay, then I can see that's a true trend line. Okay, so that is it. So basically, so we have that trend line going downwards. Okay, and then we see price respecting that trend line each and every time. And we did see it again this week, price respecting that area in the markets. So if I zoom out a little bit again, you can see if you take your Fibonacci from that high, okay, Fibonacci's are drawn from the tip of the candles to the tip of the other candles. So from the very high to the very low of that swing. So it's a swing high, it's a swing low, price coming up, and then just retracing back into that area of the 62% area. Okay, so that is just another confirmation. So price going into that area of confirmation of selling off, and then we have that trend line that price is pushed into, and then going downwards. So we do have a nice little setup that took place on the 4 hour that you could have sold downwards in the market this week. So let's go down to the 4 or the 1 hour time frame. Okay, a couple of things happening on the 1 hour this week. So first of all, we have this area in the market that we pinned out last week after the analysis, saying that if price happens to break above or below it, we react to the markets. Okay, and then not a lot of times I predict it, because predicting, especially currency markets and especially with the news and all the events happening, is not always the best to do. So rather react to what the market gives you and then trade accordingly. All right. So price going, and it broke just below that area in the market. Okay, you can see that. Then it made a big retracement. Where did that price retrace to? It retraced to this fair value gap that was created. Okay, there you go. That's a gap in the market, or an imbalance in the market between that candle and that candle. And as you can see, price beautifully retraced back to that. You can even take your Fibonacci out. You take it from that swing high, okay, all the way. If you had a swing low over here, you could see price not retracing, okay, not retracing back anywhere. So you just move your Fibonacci along. And there we can see the big swing low and then a big retracement up. So if we draw it across, you can see price going into that 62% area, but just touching that area of the fair value gap that was created. So if price came here and you were going to sell off, there's another confirmation of that imbalance in the market. I would have just waited for a nice perfect entry and then selling off nicely to that area. Okay, so that is a nice little sell that happened. You know, short sell, but I mean, it's pips in the bank. Then price came down to this area. Why did price move all the way? Excuse me. Why did price come all the way down here? Okay, so if you look left, I'm just scrolling out a little bit. What you can see is, okay, I'm just zooming or going left again. You can see that there was a break in structure that happened over here. Okay, you can see that. What happened with this break in structure? A big gap in the market, a big imbalance, a big fair value gap was created right there. Everybody can see that. So if you take that to the right, what happened? Price retraced back to that fair value gap. That's the reason price turned over there, because it filled that gap. So if you were to sell over here, your target would have been this fair value gap that was created to the left hand side. Never forget to look left on your charts. Then price, after that, price started moving upwards. Okay, entry would have been, let's have a look here if this actually played out. So you take your Fibonacci from that swing low to that swing high. It's a big candle. Okay, big swing candle. Swing low, swing high. You would have had nicer entries obviously on the lower time frames, but I'm not going to drill down to lower time frames. I'm just showing you on the 1 hour. Price retracing to the area between the 62%. Yeah, that's your area of entry. I'm just taking this out not to confuse anybody. So that's a nice buy entry. So price started moving upwards. So that's your buy entry, and then it moved upwards. Then if you missed that entry, you would have had another entry, okay, in the form of this swing low over here to that swing high. Okay, as you can see, price going up, making a swing, coming back, retracing, swing low, making a nice big high, then consolidating, swinging low all the way to the 62% once again. And that is where price started shooting upwards. Okay, so that is always the areas in the market that you need to look out for. So currently what we're seeing is a little bit of a, you know, consolidation coming into the end of the week. Price not going anywhere. So I'm just going to be earmarking or eye marking or just highlighting out the areas in the market. So I'm just going to be looking at this because of the consolidation that took place. You can have, okay, I'm doing a short one, but you can have a bigger one over here if you are really willing to wait that long. But I'm not going to wait that long, okay? So you can have that, looking at that area, but I'm not. I'm going to be focusing on this area this week just to see what price does, breaking above it, below it, and then reacting to the market. Let us just look at the Fibonacci, the COT reports before I forget. Sorry, guys, because a lot of guys have asked me not to forget about that. So if you look at the British pound, also the British pound, there's a lot of longs in the market that's been opened and a lot of shorts. So yes, the previous analysis or the previous week as well, there was a big consolidation of longs being closed, shorts being closed, but this time a lot of longs and a lot of shorts. So you have that little bit of continuation upwards. So we might see a little bit of movement upwards to the market. So that's all from my side today, guys. I hope you enjoyed this analysis. If you did, don't forget to hit that like button, you know, give me some love, hitting that super thanks button, and then subscribe to my channel, hit that notification bell, and then we'll see you this week coming. I've got a couple of videos that I want to make, so be sure to have your notification bells on. Guys, I hope you've been having a wonderful week. Stay safe and happy trading, guys.